Most real estate investors, they think they're set for retirement, and the checks don't come in as quickly or as predictably as they once had. So let's talk about why this happens and what you can do to avoid it. So here's the thing. Appreciation lies in retirement. And so what I mean by that is equity doesn't pay the bills. You've got to have cash flow. When it comes time to retire, you must have consistent, steady cash flow taking place. So selling and refinancing, they just get harder with age. What you need to be mindful of is, what does that steady income look like? Because appreciation, although it looks great, that worth looks great, you can't eat appreciation and you can't eat equity. So what does that look like? And it's giving thought to this and planning for it as you go. Active investing, at the end of the day, it's a job. It is a job. So if you go into retirement thinking, oh, I'm just going to set it and forget it, you can do that, but it depends on your portfolio. Management in an apartment that you still manage, pretty active. Maybe it's doing a 1031 exchange into something more passive, like make up an asset. It's an absolute net deal, right? Could be a Chick-fil-A, could be a McDonald's, could be a gas station, could be an oil change place, whole host of things. Or maybe it's debt, right? Passive cash flow wins in a retirement. This is why you see people with a traditional portfolio, right? As they age, early on, they're in equities, right? Got to get appreciation. And as they age, that switches from equities to bonds. Got to have cash flow. Must have predictability because you can't make up for any losses. So passive cash flow wins. Predictable income in retirement. That may be debt, right? Lending money because it ultimately is less volatility. And that means better sleep at night. So if you want predictable income, you want it backed by real estate without headaches, well, you can check out what we're doing. I dropped a link below in the description so you can see what we do to create predictable income. It's really, really probably well suited for those in retirement.